Bloodbath Warriors. How's everyone doing? Everyone okay? I can say this. I don't think anyone got stuck long equities here that are hanging out in face. How you doing, AJ and Mike and Steve and Bran? How are you? A lot of volatility. Yeah, Aussie, nice. I came in. Ryan also smelled a rat there too. Ben, how you doing? Ben, you still short? Are you covering shorts at 51? Hi, AJ. Nikita, how are you? You new here? Monir, how are you? I bought it. Okay, yeah. All right, so here's what I hear from most people. I've been telling people to get out of the market, not just in my work, but people I know. I don't want to see them get hurt. And 90% of them said to me, Dale, I'm just going to ride out the course, or just another dip. This is the first time in years that buying a 10% correction did not work. Okay, then you hear guys like Kramer saying he feels duped because he was believing the chatter that this was just negotiations, and maybe it'll turn out to be. But let's take a look at the charts now. Okay, let's just go to rid of this.
I mean, hey Dale, good morning,
Hey,
and
Matt, buddy.
TGIF everyone. I mean, just so you guys know, we're only at the 24% retracement of the COVID lows to the all-time highs.
Okay, well,
That
remember
that's
this
it.
too, Blake. Oh, okay. So,
Yeah. No, I'm just
um,
saying that there could be more if I mean, this market could definitely give us, down 25% before it's all said and done,
well, my target was 20% at 4,900 up here. Now, I'm transparent, right? I made a lot of money between here and here. I did pretty good in Nvidia puts a few times and B of A. But I'll admit I'm a little pissed off because I got flat into the tariff announcement and all the tough money. In 2 days there's windfalls and I'm not there. But we're more than halfway to targets now, so it's a tougher trade. The other part of the scenario was kudos to Jim Walsh. He got long bonds, and last week I said if there's one takeaway I have is that yields have peaked. Right? I was talking about the 10-year. We tested that breakdown here. Look at where we're at, 390 already. So, I really think, Blake, that we had traders prepared for a lot of this stuff. Don't you?
Yeah, I do.
I mean, no one was bullish a dollar. People weren't rushing in to buy the dollar because of risk off. We prepped them for that,
Yep.
right? Okay, so I mean, mission accomplished. I mean, I don't want to sound like George Bush, but that's what people pay us to do.
Yeah.
They pay us to teach them techniques and give them narratives that aren't like the majority of people out there, and help them to be careful and see what's happening under the surface with momentum and wave counts and harmonics. Um, you know, was a great job. So anyway, yeah, someone mentioned to me the 62 level I was waiting for in crude. I tried it there. I have a $2 stop. I'm only a buck 20 away from them. I had to do it just out of principle. I waited.
Oh, just
I
at that key support there.
well, I would this line, so I did it because I would have been aggravated if I didn't do it. But I waited for a year to get stopped out on a day trade.
Yeah,
On a day
that's
trade.
On a day
Anyway,
trade. Sucks.
well, we'll see.
Hey,
Anyway,
Dale.
go ahead, Kay. Yeah, you want
Hey,
to break in?
I have a line there in WTI, and I'll mention that a few times as well. Going back to 2015, I think at 62, 61.95. So that's where we are.
Yeah. So I mean, you see the number, you try it. Right now looks like it's gonna, is it taking out your line a little? You want to show it, Kay?
Well, I mean, we are what, like 50 cents underneath right now, but in a
Yeah.
market like this.
Yeah.
We always need to allow for a few algo pips, but it's still looking ugly. I mean, the the thing is, I did not buy it just because we are ahead of the NFP as well.
Oh yeah.
If
It barely matters the NFP.
if there would be, and it may not matter if it comes out as expected or slightly better, but if it comes in worse and the market sees that the job market is starting to really come down, then it may all it may go lower, just lower.
And guys, how sometimes you have objectives, but as the market progresses, it confirms the objective. So this 5,500 level, first of all, 57 was pretty big and eight,
Mm,
but this level right here, 55 to 61, gives you 49.
mm,
Okay. And I didn't know when I was talking 49, it was based upon a megaphone. But then you get things as the market moves along to confirm targets, formations that you couldn't have imagined
yeah.
back here.
And
All right.
we just closed the pattern in play for 8% on the short S&P just this morning on that bear flag pattern that you see there.
Nice, nice, nice.
Hey,
I
Coach,
have nothing else to say.
I was just real quick. I just want to mention Steve is here, Stelios is here, and Grega's here, and K-Man,
Oh,
and obviously
wow.
me. So we have a
Oh,
full house
wow.
today.
Okay. Well, who wants to go next?
I can go for a few minutes, only a few minutes though, because there's too many
Okay.
of us to, there's
You're
a lot
on
of
the
us.
timer. Okay,
I'm on the
go.
timer. All right. Okay. So share. Well, where do I start? I mean, it's been hectic. Yields are going lower. I've been saying for a while. I think this was a bear flag, and it's manifesting. Same with gilt, same with treasuries. I still think they have a bit more to go. Obviously, at close to 360, we're going to have to reconsider. But yields are dropping, and stocks and yields are dropping at the same time. I
Yeah.
think one of the two could be a buy the dip, and I don't think it's bonds yet. It's very dangerous to be trying to catch falling knives in stocks, but as we get lower yields and as the S&P, okay, is breaking through this zone, the big level we've been talking about, Dale, for ages is 4,800, right?
Yeah.
So I think if we get close to that, that's definitely going to be a buy the dip opportunity. But like you correctly said, everybody's kind of been conditioned to buy the dip because hey, it works, and it works all the time. So
Not this
that's a
time.
danger. That's a danger.
Not
Oil
this
is
time.
you're right. Also, oil is crashing below support, and this is going to be deflationary or disinflationary for sure. So this is something that kind of reinforces my idea that I think yields are going lower. I think the whole global economic situation is going to be worsening, and definitely tariffs are not helping. They're being a big obstacle. And I think at some point Trump is going to say, "Yeah, we've talked about short-term pain, long-term gain, but he always measured himself with the stock market, right? His success. So he's going to. I think at some point he's going to do something. I think we all know that tariffs are just a negotiating weapon. No country has ever come through better on the other side of tariffs, especially not something like what Trump is trying to do now, all across the board and, really heavy tariffs. So I think he's trying to negotiate, but the markets are telling him that, hey, you're going to destroy your economy before you actually get something done. So I think
Well, how
Trump
about
is,
the China response today? Is like, well, you can take your tariff and tack another 34% right
yeah,
back at you.
yeah,
I mean,
exactly. This is not good, and I think at the end of the day, Trump has to find some kind of an excuse to maybe not remove all the tariffs, but find some kind of way to fine tune them a little bit and just give the market a little bit of hope because at the moment it's just a sea of red.
Don't you think in a way this was it was intentional? They knew that if he went above reciprocal tariffs and once Besant said we're going to focus, Ben's right, on yields, on the 10-year yield. What better way to get the yields down than to have
Crash your
risk
economy.
off and fear of recession, right?
You know, I gotta mention he's been right without even knowing it. And you saw the interview with him after the tariff announcement. He was not even included. He had no idea what the hell was going on. When he was on Bloomberg, he was like, I guess I don't, you know. So he's just being right by
Okay,
luck.
so he got blindsided on this too.
Well,
Yeah, you didn't see the interview? Oh my God,
No, I didn't see that, Blake.
Wow,
Well, then,
that was,
you know, you think he's going to stick around? I mean, his reputation is going to be besmirched.
He's the smartest guy in the room. So yeah, he's going to stick around. It's just, you know, but he wasn't included. He wanted to be more of a, you know, an easy, you know, he wanted to go easy, and these guys, the rest of them didn't. But anyway,
If he's the smartest guy in the room, he'll get out of there.
I don't know who his advisory team is, but man, I don't know if they prepped him for what's happening. One last thing I want to show, metals. We always look at those. Gold is dipping, but really in the grand scheme of things, it's still trading really well. Silver and platinum are not, because we know that during risk off, they are very quick to move. Silver is coming down towards this trend line support of this channel. I think what we're going to see is a repeat of the COVID crash. Well, it doesn't look like a crash on this chart, but it was pretty substantial, from 18 plus down to 12, and then within 3 or 4 months it went up, you know, over 100%. And I think we're going to see
that.
Yeah, I remember that too. I think we're going to see some kind of strong recovery, but for now it's very weak. I have longs from 23.10 and 32.42. One is underwater, the other one is doing very well. But I think I might try. I tried the long yesterday and I got smacked really quickly. But hey, I hit my stop and I'm gonna try again at some point. But man, these markets are ridiculous, and gold is still doing well, which is very, very impressive. Anyway, I don't want to take any more time. I can hand it over to Grega or Steve or whoever wants to have a go.
Well, you know what? Why not let's hear from Grega. Let me grab the charts and I'll pull up his charts on Forex Analytics. So this way we can, you know, just for time saving reasons. So Grega,
are you sure that they are updated?
Yeah, right. Everything's changed so quickly.
Yeah,
well,
exactly.
let's start with your Elliott wave view on the S&P. So here we are, you know, and you were looking for a move lower to 5,200 and a bounce.
Yeah, exactly. And basically, we are just seeing a very strong fall. What's the key right now is that we have to see 5 waves down within this wave C. So for now, with this sell-offs that we are experiencing right now, I just think that we are still in the middle of this wave C, and that most likely we will continue much lower. I think that the very big level is 5,000. That goes 5,100. This goes back to August of 2024. Yeah, that's the region around that lower channel support. So I think that that's pretty important level that we should be watching for, maybe for the next week. But definitely, I'm not in the bullish camp. I just think that this weakness so far should continue within corrective decline.
But you're still looking at this as being a 4. Remember I talked about that we could go to 4,900. That could still be a 4, and then make new highs. That's a count that you have now.
I mean, I know how the stocks have moved through history, and I know that each such a strong drop like right now, we know where is the sentiment, we know, and the fear very well. When no one is buying, the market will actually look for potential stabilization and surprise everyone. I'm not sure that we are in that period yet, but I think that towards the end of April, when we see these massive liquidations, I think that there will be some stabilization here, and still at some point we will continue higher.
Okay, so buy in May after if you haven't been playing. So instead of
That's
sell in
ballsy.
May.
Buy in May and go away. Oh man.
Yeah. Yeah, how about that, Blake? Yeah, there's a good tagline for you.
Right.
It will also be interesting to watch the total put call ratio. The total put call ratio after today's sell-off on stocks, I think that readings that we will get on Monday will be pretty interesting, and we will see some spikes in sentiment to the readings that we have experiencing back in
You,
August.
you
So I
know,
think
that's
that
been the hook the whole way down, though, Grega. Sentiment's bearish, sentiment's bearish. Now, yeah, we're getting to
yes,
even more.
but
It's been extreme on the greedometer for 3 months now. And if
yes,
people
but
have been buying the market because everyone's bearish, they got killed.
But if you look at total put call ratio, we are
Yeah.
not at the extremes yet
Okay.
from the last year.
I saw there were records broken weeks ago. Anyway, so okay.
I was
So
going to pull up
yeah,
the DSI really quick so you guys can see where the sentiment is for the S&P. I mean, we're running at 22 overnight, so that
yeah,
is
but been there in a long time.
yeah, it's getting there. It's getting not quite extreme, but it's getting there from a DSI standpoint. So
I just attached this total put call ratio right into the chat.
oh, okay. Oh, in our chat room. Let me see here.
Exactly.
Okay, so this is the Forex Analytics chat room. Here's a put call ratio that Greg is discussing.
Yeah,
Okay.
exactly. And we are not at the
Yeah, I
extremes.
mean, you can see that. Yeah, I mean, it's obviously on the rise, and you know,
Wow.
we're getting towards levels that
Exactly.
could really freak out. Well, that means mass. You know, it's very extreme, and that's let me just mention. You know, when you talk about like, you know, patterns in play, we have no patterns in play right now. We just closed that the bearish pennant. And here's the thing, and this is one thing that I learned about chart patterns. I want to ask Greg, do you get the same type of thing when you're looking at Elliott waves? Like here's the S&P. Let me just show you what the target is. So the target is it was ultimately 5,100 on this move. But when you get some extreme moves like this, and this is news driven, what you'll notice is we've almost reached for that the target, and we stop shy of it because it's too extreme. There's too many orders down there. So you have to be cognizant of that, because today, yeah, I mean, you got non-farm payroll, which could stabilize the markets a little bit. We were just talking about that in the chat room. Actually, I'll just show you this real quick. We're talking about that in the chat room, but also talking that Fed Chair Powell's speaking today. And you know, Dimitri was asking, is he going to give us an emergency rate cut? Hell no, he's not going to give us an emergency rate cut. But all he needs to do today is say, we are now, you know, cautious on, you know, the tariff news and headlines and, you know, everything that's going on. All he has to do is say he's cautious, and now you've got a Fed put right now. And then the stock market is going to reverse all of these losses by the end of the day without the Fed doing one thing. Things like that can happen when you get extreme like this. So, Greg, I'm going back to my question. Do you see that in Elliott waves too? Do you see that extreme sentiment sometimes, you know, that doesn't allow your wave counts to measure exactly what you were thinking?
Yeah, of course, the markets are not always 100% right with the wave structure itself. I think that sentiment itself is much more important, as you said. But if we see some kind of a sudden reversal on stocks, I just think that it would be much more bullish for the euro dollar, in my opinion, which is still a buy dip on the next pullback or sell off on the dollar, as you can see on this chart.
Okay, yeah, and I know we have K-Man here too, because I want to hear from him about what he's witnessed overnight, and you know, as this China news came out. But just real quick on the dollar, because the dollar obviously, you know, we've seen it finally firm up. Been warning him, as Dale pointed out. We've been warning him for a couple of days, dude. When it gets risk off like this, you've got to start thinking. You know, as I've been saying on Twitter, you know, the tide's coming out, and you're seeing which person's out there without their shorts on right now, and who's dangling around as the tide comes out. And you know, the tide's gone out, and the dollar looks like we're getting a little bit of a lift here, right?
Yeah. Would you buy Aussie here, Grega?
Well, Grega?
No.
Okay.
I mean, it's such a big fight between China and US right now that it will be very volatile, even if the big time frame levels are very interesting. And
Yeah.
I just think that
We obviously
it's a
broke already,
pretty,
so here.
yeah, we are at this probably below 78.6.
Wow, man.
Yeah,
I
we're
mean,
going
that
for those generational lows that Blake talked about. But
it's
on the weekly, pull up a weekly and put up an RSI.
yeah. Oh, here I'll do it. Over
Okay.
here. Let's.
And Greg, I wanted to ask you and K-Man, you paying attention to how credit spreads have blown out in the last week? Junk bonds, worried about recessions, credit issues. That's different too. Every other correction, people would go, "Hey, the credit spreads are still tight. They're not blowing out." This time they blew out. Does that make a difference? I mean, look at what the banks did. The banks got murdered. B of A. So is that a different part of the picture compared to where we were a year or so ago?
Are you're US and Cayman, right?
I came in, or
Okay.
Grega, or you.
Yeah. I mean,
Yeah. Okay.
it's obviously done so, and also for the both. Well, the reason is both sides of the tariffs, because we heard yesterday as well that the mainly from the French side, that they could retaliate on more than just goods, but also financial services, which we know that America is a dominant force in global markets, including in Europe. And I think that's where, and the second bit of this equation is that we are now clearly trading the global slowdown, and China just accelerated this um, trading pattern, I would say. So yes, the credit spreads have been rising, but they also have, well, they have been rising, and then yesterday at one stage they started to come back. Also early in our morning, they started to come back, but then the China retaliation is probably going to weigh on them, or stretch them again. Yes, I mean, if there's no I mean, scaling back on all of this, and we're going in and out trade, or even more than just trade war, they are probably going to blow out again, and that is part of what you see in the risk off as well, right?
Yeah.
This acceleration now is just dragging everything in its wake,
Yeah.
because we had a recovery of the dollar this morning. There was a lot of expectations now, and we see that across the board. First of all, you saw the dollar yields collapse, but then the rest has been catching up like really fiercely overnight and in our morning as well. I mean, European rates were coming down. Aussie Kiwi rates got absolutely slapped. Gilts were dragged higher as well. So it's really now we are trading the global slowdown, and that is something that is yeah, it's going to affect basically everything.
Yeah.
I mean, that is
Okay.
a nasty looking. That's a nasty looking yield
Yeah,
on Aussie. I mean, that's ugly. I mean,
yeah. There's been a fierce acceleration there all of a sudden overnight.
wait,
Look at junk
what about
bonds.
Japan?
And Japan as well, yes, because they are struggling with their own thing. They're trying to get Trump at least on the phone before the 9th of April, but I'm not sure whether their plans of a Japan-US summit is reachable.
And that's comments we were just, again, if you guys aren't in the Forex Analytics chat room, I mean, this is like, PM was saying Trump is causing a real major, self-inflicted wound. And I'm like, he's got a few days until the 9th. And we got a few days, but man, it could accelerate even more.
Yeah, and watch out, because I was a bit surprised actually, China retaliating exactly today, because we got the TikTok deadline tomorrow. And them retaliating today makes me think, and probably that's what the market is looking at right now as well. If you look at how it reacts, that they may actually not be ready to make a deal and tell Trump, like, well, if you want to ban TikTok, yeah, so be it, mate. But he, on the other side, is dying to get it in his own portfolio, and so yeah, I think this weekend will again on that side, on that front, be, especially China, US, be very interesting as well.
Yeah, it's crazy. Hey, look, we got a few minutes until the jobs report comes out. I guess we came in since you're talking already. Do we care about the jobs report? I mean, I do, but do you?
Yeah. I think we have to look at it because we saw those challenger layoffs. They started to reflect all those Doge layoffs. So if we get a weakened number, but it only reflected in government payrolls, the market could perhaps look through it. But if you see private non-farm payrolls starting to come off, which may be again a bit early in this report, but we will see. Sooner or later, it will start to come through, I think. So look at the private non-farm payrolls, also the manufacturing payrolls, perhaps more than anything else this time. And that balance could be the important one. If you get a really weak report, it's going to be looking a bit like Armageddon this afternoon, I think.
Yeah, and so we could either see a continued move lower on weak data, and if we get a little bit of a, if I think Goldman's looking at 130 or 14, I forget what they're looking at some headline number that's not horrible. Morgan Stanley was looking for 155. Anyway, we get some decent data. Maybe it stops this bleed that we're seeing for this week. So real quick, Stelios, did you have any? Or I don't know if Steve is here. No, Steve already left. Stelios, do you have any thoughts about non-farm payroll?
I will say this. If you told me what the number is, I can't tell you how the market's going to react. I don't think the payrolls are important now based on what's been happening over the past couple of days.
All
But
right,
if you told me
Grega.
it's negative, I can't tell you if the market goes up or down.
Okay,
Sorry.
Grega, do you have any thoughts here?
Well, I absolutely agree with Stel. It's very hard to be smart here and make sure how the market will respond, because who needs the NFP moves when we have such a strong volatility already now?
Well, you know what I'm actually hoping for is I'm hoping for a very strong piece of data so the euro can dip back towards 110, and I'm going to get on the long side if it gets down there. And I don't know if that's going to happen. I'm just hoping for some strong data today to kind of counteract what we're seeing to give us some better price levels. How about you, Dale? You have any thoughts on non-farm payroll?
No, my thoughts are on the aircraft carriers in the Middle East and the B-1 bombers and long crude. And, it is, there have been many examples in history that first the economy sours and then leadership takes the country to war to distract and unify.
All right. All right. Well, then
Hey, Dale,
let's
Dale, I just bought a little oil with you.
All right, man.
Hey guys, look, I'm gonna say something that we're working on our end. It's gonna take us about a week to get this all done. Take your $1 trial of Forex Analytics. It's $1 for 10 days. You can jump in the chat room with us. There's so much volatility. This is the place you really want to be, having conversations, seeing charts from other traders, what they're looking at. This is it. We are going to counter all of these tariffs moves by giving you the deepest discount on a month-to-month basis that you can lock yourself in at. Stelios and I have already been working behind the scenes to get that done. It will be next weekend. So this gives you an opportunity for the next week to take your trial for 10 days, get to learn what we're doing. Then you get to lock in a very, very low price, actually the lowest price we've ever offered on a month-to-month basis. We're going to be doing it to counteract all of these tariff moves. We started talking about it yesterday, and we're going to do it. It's just that's why I'm saying take your 10-day trial for $1 right now so you can actually start getting familiar with it. It's like it gives you a nice little head start. And then when the special comes out, You guys will take advantage of it. And then we do it like this, and people know this. There are people that are grandfathered in for the last 8 years at prices that they've locked in Forex Analytics. So you can do the same. We're going to do it for you. So take advantage of that, like today, maybe after this show or later on this afternoon. Here we go. Data is coming out, and remember, we got Canadian data too. Jobs are
Strong.
228.
Oh, 228.
Unemployment rate came in worse than expected, though. So don't expect a huge
Payrolls
increase.
high. Hell
Yeah,
yeah.
so the dollar is actually weakening on the earnings data and the unemployment rate. So you're seeing the dollar actually weaken a little bit as a result of that. I didn't see the Canadian data a little weaker than expected.
Bit weaker, and the full-time loses quite a bit of jobs. Yeah, that's a bit of a weakish one.
Yeah, so the data, even though the headline number is good, don't think about the dollar should continue to weaken here. We should see the euro back above 111. I think I didn't make any move here. I'm already long some sterling, and actually I'm short some dollars in other ways. So I'm not going to really react to this news personally.
That's okay, Blake. People who buy headlines today sell newspapers tomorrow.
There you go. That's the Dale way. Dale's got his sayings, and this is true. So do you have a guest today, Dale? I know it's Friday,
No,
oh, you don't?
no,
Okay.
no.
Guys, I'm gonna leave you with this, and then we'll take comments from Grega and Stelios and K-Man before we go. This move right here, this Euro Aussie is probably the most bonkers to me. I mean, it overshot. And was up 800 pips at one point. We're up 640 right now. This is going to be a move that will unwind today if you see stocks recover today. So just keep an eye on it, because I think it's worth noting, if we get a recovery in risk, you might see us dip back into the 170s. But that's a if. And then if you look at periods of risk aversion, you can see how far this thing can stretch. So that's why I know when traders see these completed patterns, the first thing they think is, oh, I'm going to fade it now that it's completed. But you have to go back in history and go, what caused that? Well, that was COVID. What caused that? Well, that was the GFC. You know what I mean? So be real careful about getting too aggressive when you see moves like this.
We have also seen it on yen crosses, similar.
Yeah, yen crosses are
Aussie
similar.
yen,
That's
yes.
exactly right, Grega. The same type of thing. And the yen crosses are obviously, I mean, look at the Aussie yens actually breaking down in a very glorious fashion today.
See, it is a risk-off pair still.
It is, yeah, alongside with the Euro Aussie. So I just wanted to point that out, because sometimes traders tend to get a little crazy and not think about everything that's going on, and they step in front of these things. But let's get final comments from everybody before we go. K-Man, you've been up since the early European hours, analyzing, doing the flow show, sitting in for Ryan. Anything that you want to tell the traders as we wrap up the week? Excuse me, sorry.
Yeah, for one, this jobs report, we have to bear in mind that this is still a report that came out before we got those job cut announcements, or well, just before. I mean, if you look at the period where the data were taken, and that the market is trading something different right now. What I would say though is listen to Powell later on, because where the majority of people expecting to still walk maybe both sides of the aisle as he does usual, without crossing any red lines or orange lines maybe. But if he starts to talk about the risks that we may have in the job market, today's report is not going to give him that. So he may still err on the wait and see side. But if he starts to talk about the risks that global tariffs may have on growth, that may be something that the market will pay attention to, because I mean they are firmly on hold and they are waiting, but we never know when they will see something, right?
Right, exactly. Hey,
Can you
just
post a link for one of our attendees wants the link to join, and Astra is joining, and Mike Green is joining. So I
yeah,
think
I'll
Elizabeth
let me do
Christian.
that
Yeah,
right now. I'm
I'm
just
on it.
closing
I'm
out
on it. I'm
positions
on it.
in the trades room. So just give me
Thank you,
on it.
thank you,
I
Stel.
I posted the pricing
All
page,
right,
which takes you directly to the page. Also, note whichever plan you choose, you get automatically the 10-day trial for $1.
That's for
Okay,
now, and then
that's
next
for
week
now.
we'll implement it's a huge sale, guys. I mean, you will literally be able to lock in a month to month as long as you stay a member. A really good price. We're doing that because of everything in light of everything that's happened this week. So we
yeah.
know
Thanks for
price
your
of toilet
support,
paper is going to
everybody.
be going up.
Yeah, thanks for your support. We laid it all out there on the court for you guys again this week. By Blake's latest example, see how ranges, if you look left on that, what was it, Euro Aussie
Oh yeah.
chart that you had?
Yep.
Yeah, okay, Mandy, you're right. You know, if you walked away with a plus week here in this environment, you did better than 90% of the people out there, okay? Because they have recency bias, you know, from what worked always works, and, you know, TA always works too. Um, anyway, so Dream Team, have a great weekend. Looking forward to, you know, and think about it. I think Grega's going to be right. You know, always said that we could go to 48, 4,900 and then rally to 7K. Maybe it's not 7K, but there will be a good rally. So I don't think it'll be tech. Um, Maybe it's the industrials. So anyway, there's always another trade, but some of these trades, when you miss them, uh, you know, my heart is broken being flat-footed on the tariff announcement.
Yeah.
Anyway, anyway,
Yeah.
I'll cry in private. I'm not going to do it here. I got my game face on, and I'm a warrior with you guys. And have a great weekend. Enjoy. I think we have the Final Four this weekend, and for me, that makes it a great a great weekend for a senior citizen. And that's it. So have a great weekend. Don't just count your pips, count your blessings. And great job, Blake, Stel, Kay. Great to have you back. We miss Ryan already. Not because you're back, but we missed you, and now we miss Ryan. Anyway, have a
Send,
great weekend,
send out
team.
the missing persons alert.
Uh, yeah, where did he go? Where did he go for a few weeks?
Spain.
Spain,
Oh
yeah.
God, the rain in Spain. Good for him. Ryan works hard, and look how he takes care of himself. He takes these breaks. That's why he has the longevity in the industry. So be more like Ryan than me, who only takes one every 10 years. Okay,
Right.
and
Seriously.
right. Uh, have a
Hey,
great.
I want
Go
to
ahead,
say,
buddy.
Grega, thank you for being here and updating us on
Yeah,
the
Grega.
S&P and the dollar. It's really good to have you here.
Yeah, it always is good to have
Thank
the
you, guys.
wizard here. And everyone have a great weekend. Tell
Thanks,
the people
Coach.
you tell the people you love that you love them. They're not mind readers. And we'll all see you next week, and we'll get them again. Adios, everyone. See you, team.
See you, Coach.